like I should feel like I should feel like I should feel like I should go. Go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should.
GETCRAK. Wake up, motherfucker.
Companies faced a lot of challenges in 2024. CEO departures at U.S. companies hit a record high. The most notable included Boeing, Nike, Starbucks, and Intel. Beyond that, we had political fights and rising public hostility toward corporate leaders. Note the United Healthcare CEO assassination. Given all this, what challenges await CEOs in 2025? Well, joining us now to discuss is Lulu Cheng-Meservey, founder at Rostra, and Jeff Sonnenfeld, Senior Associate Dean for Leadership Studies at Yale School of Management and a CNBC contributor. Guys, Happy New Year. Lulu, why is direct communication going to be so important for CEOs in 25?
Well, thank you for having me. So CEOs have basically become the human mascots of their company. People make it incredibly personal, as we've seen with the tragedy around the United Healthcare shooting. People treat the CEOs as the human emblems of their company. They attribute traits to the company that they see in the CEO. We see this happening with Elon. We see it happening with Alex Karp. And so for the CEO to be strategic about displaying that combination of traits that they want to impute to their company is going to be super important.
Jeff, what were some of the best CEO moves in 2024? What can CEOs learn from that for 25?
Thanks a lot. I agree with what Lulu just said, and thanks for the invitation to join you, John Contessa. You know, I've been doing this particular segment, believe it or not, for over 30 years, and it's just really good to take stock of where the last year was. Einstein says, you know, learn from yesterday, live for today, hope for tomorrow. This past year, we've seen that Walmart, Motorola, Goldman Sachs, Bookings.com, Citigroup. These are five that really were underappreciated, that their stocks soared. They did very well, extraordinary transformations. I know we don't have time to get into depth on it today. I actually have a Fortune magazine article that just came out on this for anybody who's interested in it.
Jeff, hold on.
But these are companies that did a great transformation.
Hold on just a moment, Jeff. Sorry, we got some breaking news on U.S. Steel. Our Pippa Stevens has the latest. Pippa.
Take a look at shares of U.S. Steel because they are jumping here after Nippon Steel is reportedly sweetening its bid for U.S. Steel as it hopes to get approval for the acquisition. According to the Washington Post, Nippon has said that it would give the U.S. government a veto over any reduction in U.S. Steel's production capacity. That, of course, is meant to alleviate some of the concerns brought by CFIUS that a decline in domestic steel production could pose risks to the national security of the United States. Now, President Biden has until January 7th to decide whether or not to approve or deny the deal based on those CFIUS concerns. You see there, U.S. Steel up 9%. Guys?
Thank you very much for that, Pippa. Jeff, I know that this is an issue that, I mean, we were even talking about the importance of some of our big industries on election night. Can you talk a little bit about your reaction to this sweetening of the pot for the U.S. Steel?
Yeah, that is pretty exciting news. What's interesting, Contessa, when we did talk about it, we were surprised then, as we are surprised up to this moment, that this is one area where President Biden and President-elect Trump are in agreement, and that's not where, in fact, the labor unions and many others are that are eager to see this as they feel go into deeper pockets, stronger hands with the Japanese ownership. but there's a strong sense that this should stay as a CFIUS, which is, a protected industry like the airlines or others, that we need to have this to be domestically based. And it is this sweetening of the deal is interesting. It will make it more complex. This is definitely going to have to go to litigation. But right now, the U.S. government, both parties are against it. They really want this to stay in U.S. hands. Just the way we're looking at trying to bring chips back to the United States, it would be a bit of a paradox if it flipped the other way. But again, it's certainly in the interest of a lot of key stakeholders to see it go into stronger hands, which was the Japanese hands that will invest in it.
Jeff, thank you for that. Lulu, I want to go back to the conversation that we were having about the CEO environment next year. I mean, when you're seeing such a difficult environment for leaders where with politics, many feel forced to pick a side, you had this big backlash for DEI this year. And that, as you said, they can personally lift or sink share price of the stocks. How does a leader of a company navigate all these new pressures amid, by the way, a lot of AI concerns or strategies that must develop very quickly?
Well, so CEO resentment has already been really high. I think it's going to get a lot higher. I think part of the reason for the turnover has been that the job of being a CEO, while it's paying really well, is unglamorous in the sense that you just get constant hate and vitriol for you and your family 24/7. And that's only going to get worse. A lot of CEOs are going to get paid even better, especially as the stocks of the best performing companies rise. They're going to be under pressure from shareholders and themselves to start replacing a lot of their employees with AI. So AI disrupting the job market is a reality. 2025 is going to really pop off in terms of CEOs. You'll see CEOs making major changes of replacing customer service and sales and a lot of people with AI. It's going to make resentment a lot worse. And the other thing is a lot of the CEOs that are the most interesting, the most watched are CEOs of private companies now. So SpaceX, massive company, I think it's 350 billion valuation. I know it doesn't exactly translate to market cap, but a lot of these companies would be large cap companies. They would be in the S&P 500, OpenAI in the mid 100 billions. Anthropic would be a large cap company, Ramp, Anduril, Scale. These would all be large cap companies, and we don't have the visibility into what CEOs are doing.
It seems like
deal right now. Negative in the pre-market has been all morning off the back of reporting that President Biden would block this deal. Getting confirmation. Biden blocking Nippon Steel's proposed takeover of U.S. Steel. In a statement, the president saying the following: we need major U.S. companies representing the major share of U.S. steel making capacity. That is why I'm taking action to block this deal. He goes on to say U.S. Steel will remain a proud American company, one that's American owned, American operated by American union steel workers, the best in the world.
This raises the question of how this will be interpreted next year. This seems to be in line with what President-elect Donald Trump was talking about, that he also would block this deal. But it comes at a time where everyone is expecting a whole host of mergers and acquisitions as a result of a loosening in some of those parameters. And it raises a question: what's national security, what becomes political, and what will get through at a time when ostensibly this is going to be an administration more amenable to mergers.
That stock is down in the pre-market by around about 8%. Ed, to bring you back into the conversation, to build on what Lisa was saying, what's the signal you take away from this?
From the steel announcement?
Blocking the deal. To Lisa's point, what can get done, what can't get done?
I mean, I guess we have to conclude that the Biden administration is still in business. They haven't closed the shop yet. But it is consistent with what Trump's been pushing for, as you said. And it's also consistent with a regime change. In the Biden years and Obama years, I think you could kind of combine those years together. We had a lot of globalization, the idea that America's interests were identical to global interests, and we all had to work together, kind of a kumbaya kind of approach. Now we have, no, everybody pursues their own national interests, and we can talk about it and negotiate and work things out, but we're going to push for our national interests. You push for your national interests. We'll use our economic power to get what we want and to try to cut back what we want and to try to cut back what we have to give in return, and that's kind of the environment we're in right now.
All right, checking my audio. All right, so it is January 3rd, 2025, and we got some news on U.S. Steel. So it was up yesterday, down today. No clue what I would think about that whole sector with steel, aluminum, and all that. Usually, I would have said, like, prepare, since we're at the end of a bull market, commodities will start taking over, and I'm hoping China can do some actual stimulus that works in their domestic market and in the global market. But we got European problems now with the higher energy prices. I guess I should bring that up too, about natural gas. So I was shorting natural gas. Let's put up that chart. I'm about to get out of my position there. So I told you on the New Year's Eve stream, I got into cold. I had some more cold, KOLD, and I'm out. I don't like holding that stuff over the weekend. You don't know if there's like some good weather report coming out. Like last weekend, right? You got a really good weather report, and that stuff. Natural gas started bouncing. So let's see. Natural gas. Let me look at the natural gas one here. Yeah, all right. So I think we're done with natural gas for at least a couple months. Okay. I'm not going to say it's going to go down over the weekend, but yeah, if you got another chance to short it, yeah, take it next week. We can see if it goes down some more. Yeah, I don't think it's broken any major area yet, but I think when I look at this candle here, yeah, there's a lot of volume trying to push this above 4 and hold it there, but after that, it just completely collapsed. I don't think there's any buyers that's willing to get serious above like $3.8 million BTUs. Yeah, that's the units. So now let's look back at steel. Here, yeah, I don't know. Is that a good place to buy? Because we've already hit a low back in September, $26.78. So the ticker is X. This is US Steel. The other one is Alcoa, AA. So I think it's going down in sympathy with it. Aluminum can get pretty good. Yeah, pretty good when it wants to. So this was a really good trade back in the COVID days. So let me see what the monthly was. Yeah, you see this? This was real nice back here, $5 to $100. This was a real nice trade. It's similar to like Zim with the shipping trade, so goods. So right now we've been going sideways. Everybody's into tech right now. So what I'm looking for is a shift in attitude with the XLB. So XLB is the ETF for materials. So you see that? So December was terrible, not only for tech and all that other stuff, but terrible for especially in the materials sector. Very, very bad. Very bad. Energy, same thing, I believe. XLE, yeah, same thing. Down 10%. Yeah. So oil, gas, all that stuff was down. So when you compare with like how tech did, not too bad, right? It's just barely down like 0.5%. I think you got more of a hit in communications, like down 1.67, and then yeah, this one is a bit deceiving because it was actually high at the beginning of December. You see that? And then it moved down. But in any case, terrible for XLB and XLI. I guess industrial is probably the same thing too. Yeah, industrial, same thing, down 8%. So this is what I'm watching for this year. And utility stocks, yep, perfect. So these are perfect. So since we're talking about utility stocks, let's look at uranium. Uranium had a terrible month too, 16% for uranium mining stocks. But guess what? After the New Year's, it started going up. So people that were selling at a loss, because I'm guessing they bought high in May. They held it. They went back up in October, and then they held it still, and then it went down, and they gave up. They just gave up. Now it's trying to bounce. Okay, let's see. And the same thing with lithium. So you can look at lithium producing stocks, same thing. It had a nice recovery in September, October, then just fell apart. So these are the stocks I'm watching. So looking at materials, and if you look at some of these infrastructure stocks that take care of aluminum, like LEU, what's it doing right off the New Year's? Up 20%. NNE is up 8.62%. LTBR up 32%. So just after New Year's. So once people got done selling at a loss, new people come in and buy up. This is what I've been telling you guys. It's very important to look at how December ends and January begins. Then you could tell, like, oh, these are the stocks I should be getting into, and these are stocks I should be leaving. Palantir right now, my lovely favorite winner in my long-term portfolio, it's doing fine still. No problem yet, but I would not be surprised next week into the end of January, it shifts tone and starts going down, because it's going to be hard to find new buyers, honestly, unless there's a new idea about growth. I don't see anything. Another one is AOI. See that? I'm curious what it wants to do, if it wants to break out of $44. AOI is the optical, so also relate to AI because they do the infrastructure for it. I mean, if you want a good company that does the same thing, it's COHR, Coherent, owned by Stanley Druckenmiller. So put those in mind. You know, I'll have to definitely keep them on watch. We have the loser semiconductor stocks, NVTS. I've been telling you guys to go into it. So it's been doing quite fine since November. So let's see how it's doing now. Yeah, it's bouncing around. Let's see if it can clear $4 again. If it does, I'll add more and be more aggressive here. Otherwise, yeah, hold. Just hold and see, wait and see for next week. We have Sprouts Farmers Market. Sprouts, SFM. So this thing has been declining since December. So I was thinking, like, okay, a lot of people made a lot of money on this stock since how many years now? Yeah, at least 2 years. Yeah, at least 2 years or more. Yes, it has a good trend. It has a very nice trend in 2024. So now you see people are like, oh, we're done. Probably going to take profit. You're going to see if this thing goes sideways from here and how it goes into this year. Carvana, see? This was a big winner, right? 6,000% over 2 years, 3 years. Now you got to the New Year's. Guess what? People are selling. I don't think they're interested in this stock anymore. Yeah, so CVNA, I don't think they are interested anymore in this stock. So that's what I was saying. Look at the stocks that were winners before. See if they become the new losers in the next year. What was like, and then weakness, old stocks that look bad last year could be the new winners this year. So this is what you're looking for. This is what you're eyeing. Okay. Now let's see. ATAI. Oh, okay. This is acid mushroom stock. Like, I think it's controlled by Peter Thiel, or at least he has a major influence over it. ATAI. After New Year's, pop 20%. Today, 7%. So yesterday 20, and another 7%. Then we have MindMed. Not as popular, but this one is the only one that actually has FDA approval. So I'm definitely interested in holding this one and seeing if I'll add to it. But ATAI, yes, this was the one I was adding towards the end of December, hoping this would change its mood. It is changing its mood. So ATAI. So keep that in mind. All right. Let's see what other stocks we got here. Other uranium stocks is VST. VST is, I think, infrastructure as well. VST. Tropes probably told me about this one. Yes, it's been doing very well since the new year started. So it was going down. So probably profit taking in December, right? Now new people are moving in. So I think it could continue its way up. Maybe that was it. CEG, utility stock that has a lot of nuclear plants. Been very weak since November. Since I think the FTA, FCC, I don't, it's not FCC. It's somebody. It's some government agency said like they did not want to allow nuclear deals with Amazon or somebody, some big tech company, to take all the electricity. It went down there, barely recovered in November to Thanksgiving, and then just went down with the rest of the sector. XLU, if you remember, I show you XLU. See that? Utility stocks got a big hit from rising interest rates, and now it's recovering. So yeah, always look for something that's very weak, see if they change. And I think this has been holding up comparatively well compared to XLU, so that's something you got to put on your list. Now, let's look at the top natural gas companies. We got LNG. LNG, very good. It's been holding up. So this has done a lot better than the overall gas and oil companies. You see how weak they were in December. Only started recovering like last week a bit. But if you look at LNG, it's held up. The trend is still intact. WMB, same thing. Trend is still intact. EQT, trend is still intact. EE, trend is still intact, I assume. Yes, it should be. Okay, see? Very good. All right, and we have ET and KMI. So I think the ones I picked last year still look good. And these guys have been going up even before Trump. So it's not even had anything to do with Trump. It's just the fact that natural gas is going to go up this year, okay, as a commodity. So like I said, I'm shorting natural gas itself, right, with cold, okay, cold, KOLD is how you short it, but it doesn't mean that I'm short natural gas companies. They will do fine, but they may not go up. They might just go sideways for a couple months and then continue late spring, early summer. Okay, that's what I want to watch. And then I'll flip over from cold to boil probably around March. Okay, so boil is what you want to use to get your natural gas, because I've been playing around with this for a few times, waiting for it to pop. It didn't. I was expecting it to pop probably here in September going into November with Trump, but it did not happen. The weather forecasts were really killing this thing. And only recently, now the weather forecast has changed. We got Arctic blast coming in January. So everybody in the East Coast all the way down to Virginia, North Carolina, expect some heavy cold fronts coming through and maybe snow going all the way down there. Balls. Your balls are still intact. I'm not sure, Ignat. Not sure. I don't think I have a chart of balls right here. Anyhow, we got that. Very good. VST I talked about, right? Yes, good. That's another one to look at in your list. Now, these aren't on the description that I'm going to talk about, but I'm definitely going to still keep watch on Affirm, AFRM, Upstart, UPST, and FOUR. Okay, so I'll watch that next week, but there's nothing right now that screams like, oh yeah, I'm going to change my mood or anything. GameStop still hanging around just below 32. I'm not sure it's going to pop or not yet, but it could. So keep that in your watch list. What did pop was Mobileye. Excellent. So last week we got to move 14% above the $18 mark, and now we're about to get to 24, 25, 30. Yeah, I don't know. I might add more to it next week if I feel more aggressive. But yeah, MBLY. This does LiDAR sensors for autonomous vehicles. Okay. Another one is Zim. I mentioned that earlier about with China trade, materials, all that. So this does container shipping between the West Coast and China primarily. This is where it gets its thing. It popped right on New Year's. So we finally got back towards 20, and then we broke out here. So I think we got new buyers for the new year. So yeah, keep that in mind. ZIM, Zim. Another one. Oh, Jinko Solar. Yes. This one is probably very good here. Very good here. Very good right now. Oh man, yeah. So a lot of the solar stocks. I told you guys to get in Nova, right? See? So right after New Year's, this thing been doing really good. Well, so a lot of people they sold. So I told you guys to get around here with 3, right, or something like that, 3 or 4, and then once you got to 6, you got some money there. You traded that. Now I was waiting to see how the New Year's went. Yesterday confirmed it. All the sellers are gone. They got their tax loss in. New people are coming in to buy this stock, 17%. So solar stocks, yeah, they're trash. Probably not very Trump friendly, but as a trade, still very doable. Very doable as a trade. You can just go back and forth with this guy and make your money that way. Okay. Hims, yes, the drug company or not drug company. I mean, they do generics and they also do other services as well, but primarily generics for diet pills. HIMS. We're still in this range. I'm not sure what it's going to do. It's going to hit 30 again. I'm still waiting, watching to see if it can break out. If it can break out of 30 later this year, that's a good sign. But I think it's going to require a lot of motion from XBI. XBI is still down. Yeah. Yeah, I think this is going to take a while. Yeah, this thing. I think that's going to really depend on the small caps too. Okay. Yeah. All right. Just keep those in mind. But right now, I think I'm going to focus on RXRX. If you want to do pharmaceuticals, at least have AI attached to its name so it can pump. So I'm going to see if we can revisit 10 again and then break out of there and go to 18, RXRX. AI is still hanging out here. No new decision for me about that. Sound, SOUN, nothing there either. I think HB is already out of there. So if you got from $5 to 21, yeah, you probably can sell now. You don't have to worry about taxes for the 2024 year, but you can take your taxes for 2025. Wait for next week, see what happens, because that's probably a lot of money if you put a ton at 5 and sold at 21. Okay. Okay, let's see. AA covered that. Oh, KC, still my favorite Chinese stock. KC still hanging out above the resistance at 10. I'm waiting to see if China is gonna do something and push this thing to 70. But like I said, this thing doesn't really follow China. That's the good thing about it. It doesn't care about China. So it does its own thing. So we got the AI, we got the cloud, you got the China all wrapped into one. And it seems to ignore all the bad news coming out of China for some reason. So good. KC still there. And then we have another one I want to add to your guys' watch list is XIACY, Xiaomi. Okay. Xiaomi. Here. This is how you spell it. XIAOMI. They do cell phones, they do electric cars, they do everything. This is one of the few Chinese stocks since the summer has done a clean move up from 9 to 23. So I've been watching this thing to see if it can hit this old high back 21, right? January 2021. You see that? We're right here again at resistance. So keep this on your watch list. If Chinese stocks start going crazy with between Trump and Xi, they're all going to go having drama between each other. Eventually, this guy might be a good buy back at maybe 18 or something, right? And then if you time it right, you can get 18, can jump out when it tries to break 24 or 20, whatever. Yeah, I'm going to be watching this for trade. So I think Chinese stocks have a lot of good trade potential. Very good trade potential. Let's see what else. Something related to China too is Tesla. Tesla has reported deliveries yesterday. So the thing about these electric car companies, they like to report their deliveries. So not only these EV makers, but also Tesla. So you'll get kind of an idea of where they're going to go. Tesla right now, with all the news with Elon, H1Bs, blah, blah, blah. So it's been pulling back. So, is it a good buy? Is it a good buy? That's what I'm wondering. So if you guys missed out on Tesla from November up, this might be your chance to get in. Maybe. Okay. It's going to be tough for me to really recommend it because, again, S&P 500 looks pretty terrible. So now we're going to look at the S&P 500. You see this? Now you got that 18 daily going down to the 40 daily, okay, moving averages. So now they're curving down. This thing is slowing down. And then you're just trying to fight it and go back up to it again. This MACD is below zero. The average, the signal line is now below zero. This is a hard sell for me to tell you to get a Tesla, really. Because if you're going to go Tesla, maybe all you get is a trade. It's not really going to really do anything. This thing may just go sideways or try to go lower. It may go lower. So be aware next week. We got some data coming out from employment. That's one big one. We have Fed minutes on Wednesday. So you have 2-3 things to watch next week. And people are coming back from vacation. They're going to look at their portfolios finally and figure out like, what should I keep? What should I sell? Right? So this week has been light. Last week has been light. The volume is not there. Things have been going up and down for whatever reasons. Right? We'll have them next week. Okay. Let me see what else we got. PCG, uranium. Oh, NNOX. Okay, yeah. This has been really good. So this one is the Israeli X-ray company. Okay, they got FDA approval sometime in December, I believe. So beginning December. Now it's New Year's. Now it's popping. It's a terrible stock. Anybody that's been in it from 22 just been bitten. So a lot of tax loss selling here. But since the New Year's, it's been popping. Yeah, I'm watching this. I'm watching this one. It's definitely a penny stock type deal. So don't expect too much. It's sort of like TMC, underwater mining. So since December 20th, looked like it hit a low, and I guess people have given up. And once they got rid of sellers, now it's been popping from that point back up above $1. So yeah, this one, I'm not sure about long-term prospects, but now we got Trump in there. You know, I think a lot of these mining stocks, so TMC is a mining stock, even though it's underwater, it's kind of specialized, could benefit. So watch this one too. And you have the marijuana stocks also. So just around before New Year's too, has already been going up. So they've gotten rid of a lot of sellers down here in marijuana. Marijuana has been really hit since the elections, but it's already been going down before that. Hasn't really gotten any pop. Okay, it's really not good at all. So yeah, something to watch. I'm not going to be too keen on it. Okay, as the psychedelic stocks like ATAI or MNMD, but yeah, that's something to look at. MSOS ETF for the American side. I mean, if you're gonna ask me about the Canadian weed, yeah, Canada really overtaxes the companies. The margins are super thin, very thin. Competition so high too, so it's hard to turn any kind of real profit there. So I rather would stick, if you guys want to, American marijuana companies, and you can use the ETF. It's an easy way to do it. Otherwise, you got to buy it over the counter, basically penny stock land, and you can find out the individual companies there. So if you look at the holdings of MSOS, you'll find them. And MSX is like the 2x leverage version of it. So whatever MSOS does, MSOX does twice. So if you're feeling like you can get a quick trade off of it, yeah, go for MSOX. Okay. All right, let's see what else. Covered that. Nova, yes. Okay, going back to the lithium one. Lithium, the usual play that I usually do is with SGML, okay? But you can use the ETF LITP. You can use that one too, but SGML is one of my favorites because I like the way it moves, honestly. Yeah. So this one I rode from here, right? Around 6 to 8. Yeah, and it went all the way to 40. So I've been waiting patiently to see if it finally made a turn. It looked like it was trying to make a turn with the rest of the lithium guys in August, but you can see like it's still weak. It just can't get back to that 20 line. So it's still hanging out there. So keep that in mind. If we are going into a commodities type of market, okay, yeah, SGML, keep that on your list. I know other people have other favorites. They got PLL, or they got that LAC, or they got that LAAC, which is the Brazilian version of LAC, I guess. They split it into two. One is with, or Argentina, I forgot, Brazil, Argentina, one of them. So yeah, those two, who knows? You're taking more risk, I think. So SGML, I think, has Brazil, Canada. That's where they get their lithium from. All right. And then we can look at uranium again for you guys, because if you guys forgot, uranium mining, URNM. So watch that, because it's below the 45 mark here. And then you can look at the junior miners, URNJ or something like that. URNJ. So these are the ETFs. Okay. So I'm not saying like, yeah, uranium is going to really explode later on, but it's possible. It's possible, especially with the AI stuff. So we're going to talk about that. Let's look at the DLR. DLR is a REIT that does data centers, I believe. Yeah, DLR. So they rent data center space to people. This one, yeah, is an interesting one. I don't know if it follows much of the interest rates or it follows more of the AI stuff. So yeah, DLR, I don't know. Yeah, I'll think about it. I mean, I think I rather you guys just stick with like infrastructure things like VST or what was it? Core, COHR, like I told you guys earlier in the presentation. Yeah. Okay. That's it. What else? Oh, Mexico. Mexico is one thing I got to talk about. PCG I got to talk about too. PCG is the California utility. So a lot of utility stocks got beaten up. PCG is one of them you should look at. PG&E, basically. PCG is the ticker. HE is Hawaiian Electric, another one that every time it gets to 9, I like to buy. Okay, so now it's below 9. I mean, not below 9, below 10, but it's like it's getting close to 9.3 right now. So yeah, something to look at. Eventually it'll pop. So it's kind of like the Pacific PG&E story with the fires. No, California had a lot of wildfires, and that's what happened here. They had to pay out to all the people that got their houses burnt. So it started doing this, right? Bouncing below $5. So if you guys grabbed it at 3 or whatever and sold it when it started moving back up towards the 20s, and then now it bounced back. And then the final thing is that it stops doing this. Okay, the lawsuit gets resolved. The company starts trying to right itself. And then from here, you see here, right? It finally broke from 14. From that point on, it's like steadily going up. So eventually this thing will get back to $80. All right. So this is a long-term thing, right? So if you need something in your long-term portfolio that you just want to forget, just buy and forget, this is a place you can park it. PCG, and another one is potentially Hawaiian Electric, because Hawaiian Electric is at the early stage of the whole game. So this is like what PG&E was doing way back when. So it's doing this bounce back, bounce back, bounce back, and eventually it'll stabilize, stay above 15 to 20, and then it will just recover back to 40. Okay, because it's a monopoly. I mean, no brainer. Like, what else are you gonna place like utility company with? There's no competition. So that's all I'm saying. It's just like, if you need some place to park long-term money in and wait over 10 years, yeah, just park it there. If you got nowhere else to put it, park it there. Okay, especially with utility companies coming up, I think in the coming years, with all this like talk about AI stuff, and I don't know how much hype is actually going to be realized, but for sure everyone needs to have a data center, right? So you're going to need electricity, and that's just, and if you're going to force people to have EVs eventually in like 20 years, I don't know if Trump's going to change that or not, because he only got 4 years, but if the impetus is moving towards that way, you're definitely going to need more wires coming out everywhere. Oh yeah, so utility companies are always going to be a big thing. Whether or not we're going to get EVs or not, you're definitely going to need it for computers, data centers, AI, blah 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 blah. Okay, I guess that's the same thing with copper. And so we'll have to look at that some other time. Like, let's see what copper's doing. Yeah, copper is still down. So yeah, that's going to be more with a Chinese stimulus. Okay, so I covered most of the things I want to cover there. Anything else? Lunar. Yeah, lunar. Okay, lunar. So the space stock, LUNR. This looks so beautiful. Like, out of all the space stocks, yeah. So this is what's the real name? Yeah, Intuitive Machines. Yeah. Okay. I like that. I like this one out of all of them. And another one that I was talking about last week that I'll bring back up this week. What else? ACHR. Oh yeah, electric vertical takeoff and landing. So ACHR is up. It was up like 18% today, I think. Yeah, it was up. It's still up 16% right now. So this one, yeah. This one, I love this one. It's still doing good. Still doing good. I'm still not sure if I should add to it though. This is one of those risky stocks I just have small positions in, like Lunar and whatever. I mean, I'm not putting big money into this. It's just leftovers from last year that I didn't sell, so that's the question. That's kind of a hard question. I don't like how the S&P is looking. So if you have another bad day with Jerome Powell, like in mid-December, everything will just crash again. And it's just like really annoying. You're just like, come on. Come on, you fuck. You know what I mean? All you got to do is say good things, and this thing will just explode another 200%. I get my money and I can get out, with like 20K or whatever profits and just move on. But the market is not that easy. The market is not that easy. I'm sorry. This is not get rich quick. We can't do it that way. It's just sort of like a waiting game. You just have to strategize, right? Just have to. I don't have no crystal balls around here. If Ignat's still here talking about balls and shit. But anyway, bond market. The bond market is the king. So this is the reason why nothing is clear. So if you got your magic 8 ball and you keep shaking it, you're like, well, it's not giving you anything. Outlook is hazy or something. Because look at this. So TLT, you see this? Bond market's been stuck here since Jerome Powell spoke. Nobody knows what the heck is going on. Nobody is clear. We got to get a new Treasury Secretary after Trump gets in office. That also will add another level of things. So, dude, I don't know. If the bond market is not clear, then definitely can't tell you what's going to happen in the stock market. All right. Yeah. All right. Make sure I didn't miss anything. Yeah, I talked about everything. Let's talk about the PLG. PLG, like palladium, platinum. I've been mentioning that as a good buy in December. So yeah, it definitely is a good buy. And is it a good buy now? Maybe, because so PLG is the stock. This is a platinum palladium miner, and we have to look at gold miners right now and silver miners. They've been trying in the new year to bounce and recover, right? So a lot of people lost their money buying at the wrong time. So if you guys remember, right, I was telling you buy EXK in the summer, right? So if you bought here, like Antoine bought there, and I told you guys get out here, I said like, yeah, I think that's it. So whoever bought here got burnt, right? This was October. You should have been buying tech stocks. That's what it would have went up. Gold stocks and silver stocks, wrong move. So that's a big move down all the way from 550 to 350. Okay. So those guys are gone now. They're done. So gold miners and silver miners getting a little bounce for the New Year's. Doesn't mean nothing though. Because if you look at gold itself, no, nothing. Silver, yeah, still below $30 an ounce. So may not be the time yet. But platinum, palladium with PLG, man, this stock bounced right at the bottom at $1.15. Yeah, I mean, I'm hoping this is it. I'm hoping this is the big move for next year. Or, I mean, this year. We're 2025 already. So, yeah, I want this sucker to go to $5 or something. I'm not satisfied with just going from $1 to $2 or something, right? Like we gotta go higher. So this is all gonna depend also on what Trump is gonna do with the sanctions on platinum from Russia. Yeah. EXK trying to come back. Yeah, HB. Yeah, I don't know. I'm watching it. We'll see. It's a new year. We'll see if there's new buyers. I don't know. Gold and silver really are going to depend on China though. With copper is very weak right now. Okay. SMCI, I might as well mention this. Yeah, SMCI is bouncing today. So the last few days look like very tempting to buy more of this thing and seeing if it can get back to 40. We shall see. Not convinced yet though. Not convinced yet because as I said, semiconductors still look weak. They are the weakest link right now. Okay. Yeah. So if you remember, we talked about this in the New Year's Eve, explaining how terrible SOX looked. Yeah. So anyway, let's talk about like Bitcoin before I continue, because yeah, I don't waste too much time on SOX because we already went over it. You can see the way it's been moving sideways like this, very terrible. And in the previous stream for SOX, I was so very quickly here. Let me get some. Let's see. Yeah, okay, parallel lines. All right, see. So I draw it like this. If you guys remember, 2 lines, right? 2 points make a line if you know geometry. And then I just pull it up to make a parallel line up there. So you can see the tops here lines up with that. So I say that's my top. Then I pull it up here, all the way up here. You can see it's just like air. That's the problem. That's a problem. We're just goofing off at this lows. And see, is this log? Yeah, this is log. Yeah, so this could easily mean it's just going to collapse, because as I showed you in the other stream with ITB, you see that when you see like a lot of weakness where you just can't even get to the top of the range, you just collapse like that. So home construction, you see, we're done with home construction. And that's why I've been telling you guys, wait for 2026. So late 2025 into early 2026, probably the peak of housing prices. So if you guys are looking to sell a house, this is it. This is your signal right here. Because here, the housing stocks, the housing construction stocks were already moving up, starting to change their trend before Jerome Powell said, like, I'm going to start cutting rates. Now this thing is already rolling over before we have a housing peak. What that means is that probably within a year or so, you're going to have a housing price peak. It'll probably be a big bubble that will happen before it blows up. Probably towards the end of 2025, probably Jerome Powell will say, like, oops, I made a mistake. I'm going to start cutting rates. And then everything will start bubbling up in prices, especially if you are in a urban area. So if you have houses in an urban setting which has high demand, you'll probably start noticing prices spike. When you start seeing that, it's time to sell. So if you are already planning to sell a house to get cash, that'll probably be the best time to exit. You'll start seeing people come in internationally too to bid up prices. Things will get out of whack. It'll be insane. And then that's when you know, it's time to get out. Now, once the real estate market falls and blows up, probably into the summer of 2026, then you'll start seeing some ramifications there. I don't know if something will cause it to happen or the real estate will the cycle will automatically cause everything else to collapse. But once you have that, that's when the economy starts turning. Okay. And you'll see employment finally weaken. All right. Okay. I think that's enough there. Enough discussion there. Wait. I'll bring it back. I forgot Bitcoin. That's where I was going with that. So I wanted to finish that up. This is just a repeat of the last stream with the housing and the semiconductors. But here, Bitcoin right here. It hit my target. So we got 28. Now, you would be asking me, okay, if you were long, is it time to go short? Okay, so early in the week, I was doing this MST. Very nice right now, up 18% if you were using the leverage ETF. So if you bought like Tuesday or whatever, perfect. This is a time to buy. This was a time to buy. Yes. Monday, Tuesday, whatever. Now you'll be asking me, what should I do? Should I keep holding? Good question. I don't know. I would say like it could try. So if you're an MSTR or the leverage, watch MSTR's chart, see if this thing can get back up to 380 or 400. But like, let's look at this way. Let's look at the daily. You see that? So 350 would be where I would be thinking like, oh yeah, okay, this is time to short it. Okay, and the next time you go short, it's not just going to do this. It's going to go all the way down to 200. All right. That would be golden. This will be a great trade for January. Like just getting all that money out. Now, this is going to really highly depend on Bitcoin though, and the whole NASDAQ. Now, since we have the weekend, I could imagine that this thing would bubble up into Monday morning, Sunday night, Monday morning. So maybe I would consider waiting for then. If you got profits that, like, if you got a ton of it, like, yeah, you should sell some at least and wait for Sunday. If you're doing MSTR trading, but I would want to see it try to get here to 100 below, like at the bottom of this red candle here. That'll be nice. And then you'll get a failed move and then it'll just collapse right back down. That's what you'll hope for. But again, it'll take a while next week before people come back from their vacation. They could get trapped way up here. You could get a momentum move where it could go all the way back to 103,000. Okay? It could happen. Especially if people get very optimistic for the new year, because there's a lot of people that already sold already. So this move from Friday last week all the way here, I thought this was going to happen like these 2 days. I was thinking like people are going to wait for the New Year's before selling for tax reasons, because they already sold and got shooken out when Jerome Powell started talking. When Jerome Powell started talking, I thought people already left the building, but apparently not. There were still plenty of people that are still holding hope that they could hold out into the New Year's, and that didn't happen, right? Immediately after Christmas, it just kept selling. So there you go. Now we're at this point. I think we can go for one more shot. If this is the NASDAQ QQQ to 520 something around here, or 526, and I draw that dashed line because this is the major move between November 15 and the data that was released, unemployment and labor, Friday, December 6th. And we're going to get that same data this week. I mean, next week. Next week. My bad. We're not even Monday yet. But yeah, the 10th. Okay, the 10th of January. So maybe the 10th of January, we'll get back up here again. Goof just below there. And then if we get bad data, or maybe you get okay data, and then the Monday after that, it'll go down. Who knows? But yeah, I don't expect this to just collapse right now. So if you're wanting to short, okay, MSTR, that's my strategy for you guys. Wait. Get the right price, and then you can go short again, MSTR, and make your big bucks. Okay, because that would be where I would expect Bitcoin to fail, and that's the end of it. Because right now, if you look at the other altcoins, HBAR and all that, they've been trying on since New Year's. Like right away from New Year's, they've been going up. So somebody's trying to push this further. So I'm going to assume that there's enough new blood to trap new people at a higher place for Bitcoin. Okay? If you get my meaning? All right. So things don't just go up and down in a straight line sometimes, all right? Everything is zigs and zags. You got to get at the right points when you want to zig and zag. So we're not there yet, I think. Okay, I think it will be way too easy for people just to short right here and just have it move down. So let me pull up the calendar for you guys. Let me get the calendar. Okay. So you guys should be using Trading Economics. Okay, here's a link. And use the calendar there. There's other calendars too. I forget, but this is the website I use. Is nice, and you could set it to like countries and things like that, so you can see how other countries' data gets released. Okay, so here we are. Okay, here we are. All right. So today you had ISM Manufacturing PMI. So this was Friday. So this is what made the market kind of pump a little bit after half an hour into market open. So that will be around 10, right? 10 around your time. So 7 my time. Actually, I'll change this to Eastern Standard. Okay, there you go. Saying 10 a.m. Eastern. All right. So ISM Manufacturing PMI came in at 49. All right. And employment was weak, 45. They expected 48. That's good, actually. You want weak employment because Jerome Powell, what he said last month was he was more concerned about inflation than the economy. So weak employment, good sign. So you have bad news is good news because Jerome Powell is so concerned about inflation. If employment is weakening, then he has to shift and say, oh, damn, the economy might turn down. So I better worry more about the economy than I worry about inflation. So I'll lower interest rates. Good sign. You have new orders up. So economy is not getting bad there. People are still buying. This is not good. 52.5 for prices. This was higher than the 51.7 that was expected. So prices are going up. But I think the employment being so weak at 45, maybe that's what really we need, okay, to keep going. Now, Monday, we will get some more the S&P PMI, which is not that important. I think the S&P number, people care more about the service number from the ISM, and S&P are just a different organizations. S&P Global. Okay, so Tuesday morning, 10 a.m. Eastern. That's what you want to watch. Then Wednesday, okay, the 8th, we're going to get 2 p.m. Eastern. You get the minutes. So you get the meeting minutes from last month's meeting. And what that does is if Jerome Powell wants to change how he said his things, so if he didn't like how the market reacted last month, he can tell them to change how it's being presented in the meeting minutes to fix that. So that's the only reason that would be important. But if he doesn't change it, this should be like a nothing burger. Nothing will happen 2 p.m. Wednesday. Now, the last thing, though, is Friday. This is the more important thing. We get the unemployment rate and the non-farms payroll. So this one. So this will be before the market opens, 8:30 a.m. on Friday, January 10th. That's what you got to watch. So that's why I said, if you're thinking of shorting, if Bitcoin goes up really fast, really high throughout the whole next week, yeah, okay, that'll be where you would probably consider shorting, just before pre-market, whatever, and all that. Yeah. So if you're very aggressive and you want to make some quick trade, that's where I would be waiting for. Friday, January 10th, just before pre-market. 1 hour at least. So wake up early and do your shit. Do what you can and short. That's about it. That's all I gotta say about that. Okay. Now I got some more videos to show you. We got Tesla deliveries. That's a big problem. We have market optimism, and we have China uninvestable. Well, I showed you some stocks where China could be doing quite well. So if you're a good stock picker, I don't think you care too much about these things. I think the 2025 will be, again, a stock picker's market. So everything I picked out last year, you see, still has the right moves. Okay, so but you still have to be concerned about how the IWM, Russell 2000, the S&P 500, the NASDAQ 100, NYSE composite, like all these indices, you still have to be worried about, though, because when they move bigly, whatever you want to say, they can drag you down very quickly, because when volatility rises, it's very hard to push stocks up, and it will just drag everything down. Okay, that's the worst thing to be in, is when volatility goes up, because then trading becomes very hard to do. At that point, most people are not experienced enough to trade in that environment, like 2022. Most people should just stay out in cash, wait for the final dip, buy everything, and then ride everything back up. Most people are not like that experienced to be doing bear markets. Okay, so this is what I'm worried about with you guys. I'm just warning you. I'm not saying it's a bear market yet, but I'm saying, like, there are signs it could be. If Jerome Powell says the wrong thing, everything is all upon him. The Federal Reserve really controls everything. Okay. All right. So hopefully that's a good warning for you. Don't do stupid things. Take as much risk as you can possibly tolerate, but no more than that. All right. This is not a guaranteed game when you do it. But if you're an investor right now, yeah, don't worry too much. If I see some real signs where you have to jump out and say, like, oh shoot, this is not going to be a good year, I will tell you that. Right now I don't see it, but be aware about that too anyway. Always keep in the back of your mind as we go into 2025. Okay, that's enough. All right, let's do the Tesla videos.
We've been talking through it a bit in terms of the delivery and production numbers and energy storage. First, just give me your quick take on the delivery numbers. How big a disappointment from your perspective?
Well, I mean, if you look at it, the disappointment's really with really with the S, X, and Cybertruck. So that's a pretty big disappointment. You know, it's a variance of 23%. You know, if you look at the Model 3 and Y, you know, that's basically flat. So, you know, I do think that there's an issue in the higher end vehicles, which might speak to sort of consumer fatigue more than anything else. So that could be fixed with, you know, a hatchback or the Model 2. Yeah, so that's how I would read the delivery numbers. Certainly a disappointment in terms of where they came in.
I mean, is your expectation that the fight for market share is going to become a lot more intense given the rise of the Chinese EV makers, in particular BYD?
Yeah, I mean, definitely in Europe. I mean, Europe is probably going to be your battleground between China and the U.S. I think from a U.S. perspective, you know, we don't see that as much of a battleground area. And quite frankly, I think Elon's position with the Trump administration probably helps, you know, from a market share in the U.S.
Yeah. Jenna, you know, while we were sort of trying to get you online here, we were talking a bit about energy storage as a component of the business overall. How important is that? Because it is growing very quickly for Tesla.
I mean, that is the win here today. If you look at the silver lining, you know, energy storage coming in at 11 gigawatt hours, we were at 10.3. We were kind of the high on the street with respect to that. My position is I think the return on invested capital is the greatest in that business. And, you know, quite frankly, I think the demand side for energy storage is much larger than what most people expect. It's not just wind and solar. It's actually to stabilize our grid. And if you look at the trends in AI, where you're going to see the greatest bottleneck is on the physical energy. And so I think that's the silver lining here.
Jed, in terms of the market's evident excitement about Elon Musk's closeness to the incoming administration and what that might mean for the business, can we get specific about it in terms of what types of regulatory relief? There's a lot of talk about how at the federal level, it's really nothing that's constraining things like full self-driving in a particular way. Waymo's doing what it's doing. So I wonder if you can see specific things you would expect to improve on the regulatory front that's going to come to bear at Tesla.
Well, I think when you look at, you know, the timing and the growth, I think you need to separate both a play on XAI and sort of the ability to invest in that side of the business, which I think is just as important as kind of Elon's, you know, position with Doge and what people might be reading into that. Hard to quantify. I mean, if you look at the last administration or the current administration, they were about as negative on Tesla as you could be. And so, you know, I think the potential for relief around autonomy is certainly an area that seems to be a positive. Tough to quantify, you know, how that will impact them.
What about just the running and operation of Tesla? And this comes up every so often just because he runs so many different companies. But now that we see that Doge and the administration is occupying a lot of his time, and we see him a lot at Mar-a-Lago, I mean, people buy the stock for Elon Musk. How much is Elon Musk involved in Tesla?
I think he's still very involved. I mean, I've known Elon for 15 years. I mean, we're not friends or, you know, I've known and had several meetings with him. And I think what you do get with any of Elon's companies is a level of focus that is just, it's a different level than what you get with other companies. I mean, you have engineers that are going to have direct meetings with Elon where he is taking a first principles approach to everything that the companies are doing. And so far, he's been able to manage all of the balls that he has up in the air. So that could change at some point, but right now, you know, his companies are, you know, we used to say they're bringing a machine gun to a knife fight. And I think that is still holds true in terms of the competitive advantage.
Jed, appreciate your time. Thank you.
All right. Next video is about all the big tech companies, including Tesla. So let's see what this one is. This guy's a major bull. This guy always loves pumping all these stocks. So take it with a grain of salt.
Some of these big gains through 24, Palantir up 340%, Nvidia up 171, Tesla up 62. Here's another one, Vistra up by 258%. That was the biggest winner on the S&P 500 last year. That's a utility company.
Yep.
What does that tell you about the state of play in AI?
It's about second, third derivatives of AI. I mean, I think the big thing is it's $2 trillion of AI capex next 3 years. And I think, look, that's numbers that are really, I believe, going to be in stone. And there's a multiplier. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across software and across the rest of tech and infrastructure. You think about the power, the utilities, nuclear energy, names like ACO and others. I mean, it just speaks to we're going into a new age. It's not just about big tech. I mean, to your point about small caps, I think the big sort of prove it moment is the multiplier playing out. It's the rest of tech, the rest of utilities, the rest of the market participating in this AI trend. That's really, if you think about that party, the only ones let in behind the velvet ropes has been that Mag 7.
NVIDIA has been selling the picks and shovels. They've made a fortune. We've seen all the growth. Does Microsoft and Google and the like that have been spending all that money need to show some gold this year in a big way?
Yeah, and I think that'll start this quarter. I think you're going to see an inflection point in the hyperscalers for Microsoft, for Amazon, for Google, in terms of what we see with more and more of those cloud workloads now showing up. And I think it's all about use cases. That's why you look at the Messi of AI, Palantir, you know, in terms of what they've done. That's just the first piece. Salesforce has been another. Software now starts to actually participate in this AI revolution. That's going to be a key theme across 2025. Remember, with Con done at the FTC, M&A is going to massively accelerate. And that's another theme we're going to be seeing across tech.
What we saw at the end of last year was a lot of these other companies, sort of the side effects of AI or the actual applications. We saw them take a pause in the applications of AI and really study exactly the use cases, study the most efficient way to do it. They stopped deploying as much cash. What makes you think that they can apply some of the AI technology quickly enough to keep delivering the kinds of expansion and gains in the hyperscalers to keep a 20-25% return that you're expecting in 2025?
Yeah, it's a great point. Look, that's all the work we do. I mean, we look at, when we talk to enterprise around the world and all the travel we do in Asia, it's showing that these use cases, they're exploding for the enterprise. So as the ROI starts to continue to increase, that's why you're starting to see, you saw Palantir starting in Salesforce, you can see Mongo, Snowflake, and others. You're going to see it spread across the board on enterprise. But again, like the ships left the port. In other words, the AI CapEx is going to be there. Now 2025 is going to be about showing it, proving it in numbers. And that's why the reason we think tech stocks are going to be up 25%, it's not just about big tech. It's about the rest of tech participating, software, infrastructure. And look, I always say, like, haters hate. The last few years, that's sort of been, what we've seen in tech. They will continue to sort of fire in a crowd theater type situations, but I think tech continues to move higher.
How predicated is this theory on the idea that there can be some sort of expansion of the H-1B visas, that there can be an ongoing increase in employees and top talent to the United States?
For the first time in 30 years, the U.S. is ahead of China. I mean, in my perspective, from when it comes to tech, but to fuel.
Yeah, basically, HB, this is my thing. When everyone starts pumping, when everyone tells people to buy, that's when you get out. Because all the stuff he's talking about, it's already priced in. We already know this, like last year. So the S&P 500 in 2024 has basically gone up 20 to 30% for most people. So most people's portfolios are essentially just the S&P 500 anyway, right? So if you look at their 401ks, you'll just see like, oh, people just made about 20, 25, 30% at best on average. Very few people made more than that. Very few people made less than that. So when you get to the new year, you expect another 20, 30% gains in the S&P 500? No, I don't think so. The only way you beat the S&P 500 is you are rotating out into the stuff that he's not talking about. Like I said, mining stocks, energy stocks. So all the stuff he's not talking about. And, they did mention utility stocks like Vistra. We already talked about VST. They might still be good with uranium. If you got a lot of uranium in the whole mix, yeah, those will be good for AI. Yeah, definitely don't trust anybody with this guy. Always wears weird stuff. I don't know what his thing is. Flashy ties, off-color shirts, and like freaking blazers. I have no clue. So this guy likes to do this, Dan Ives, and he's always goes around CNBC, Bloomberg TV, and he pumps tech nonstop. Always about tech. Always about it. Yeah. So yeah, it's probably gonna crash. I don't know. So watch out for your Palantirs and all that. Keep those in mind.
Fuel that in terms of AI revolution, it's talent. And I think what we've definitely seen a lack, I would say supply demand. These companies more and more need to continue to fuel this with talent. So when you look at what we're seeing with H-1B and ultimately as that all plays out, it will be something very, very important that plays out in Silicon Valley and across the tech world in 2025.
Elon Musk has been at the forefront of this debate, this argument over the holiday period. Let's talk about Tesla. Tesla, an outlier in a pretty dreadful auto market, particularly for the European players. I think it was Stan Druckenmiller that once said, you'd be surprised by how few people understand what makes a stock go up or down.
Sure.
What makes Tesla go up or down? Because it sure as hell doesn't seem to be car sales. It seems to be something much bigger than...
And we're going to have deliveries probably in the next few hours, right, in terms of Q4. Look, I think this is an autonomous AI story. For the
Hold on. Let me try to add this back. Yeah. I think I got figured out how to add this back. I think my memory is just about to give out, guys. So hold on.
Some of these big gains.
Yeah, okay.
What we've seen in tech, they will continue to sort of fire in a crowd theater type situations, but I think tech continues to move higher.
How predicated is this theory on the idea that there can be some sort of expansion of the H-1B visas, that there can be an ongoing increase in employees and top talent to the United States?
For the first time in 30 years, the U.S. is ahead of China. I mean, in my perspective, from when it comes to tech. But to fuel that in terms of AI revolution, it's talent. And I think what we've definitely seen a lack, I would say supply demand. These companies more and more need to continue to fuel this with talent. So when you look at what we're seeing with H-1B and ultimately as that all plays out, it will be something very, very important that plays out in Silicon Valley and across the tech world in 2025.
Elon Musk has been at the forefront of this debate, this argument over the holiday period. Let's talk about Tesla. Tesla, an outlier in a pretty dreadful auto market, particularly for the European players. I think it was Stan Druckenmiller that once said, you'd be surprised by how few people understand what makes a stock go up or down.
Sure.
What makes Tesla go up or down? Because it sure as hell doesn't seem to be car sales. It seems to be something much bigger than...
And we're going to have deliveries probably in the next few hours, right, in terms of Q4. Look, I think this is an autonomous AI story for the next few years. And it goes back to the bet for the ages that Musk made on Trump I think is going to really play out as the autonomous future. That's what you're betting on in Tesla. You don't see that in numbers today. But I think ultimately, that's worth $1 trillion alone in terms of the AI autonomous story. But next few hours, this week, we'll be talking about deliveries. And it comes down to China deliveries, which were really a disaster at points in the last, call it 12 to 18 months, have now started to rebound for Tesla. And that's going to be very important.
What gives you the confidence that that will continue? Because there are some similar questions happening in the luxury space with companies like LVMH. Is China actually bottoming out for the consumer side of things? What gives you that confidence for 25?
It's what we see in terms of demand, in terms of what we see in terms of the overall China market for EVs. I think Tesla, a lot of those price cuts in the rearview mirror, we're going to have white knuckle moments. But ultimately, I think China is something that could be up 20% when it comes to delivery for Tesla. And that's why I think right now it's one where where the bears have sort of misunderstood Tesla. It's 10 to 15% of delivery story now. It's 85, 9% AI, autonomous in terms of the future for Musk and Tesla.
Sort of when you put together some of the things that you're talking about, you think for the first time in 30 years, the U.S. is actually ahead of China when it comes to development. At the same time, Tesla's dominance and success has hinged on its success 100%. In China. So how do you see the evolution in 2025 of the increasing divide, the increasing isolation between China's sort of tech stack and the United States' tech stack, and how those sort of both compete but also evolve in parallel?
Yeah, and it's a game of high-stakes poker, because the reality is that the reason Jensen's godfather of AI and what we've seen with NVIDIA, where the chips coming from China, coming from Asia. So that's why we're going to see this all play out with the China tariff discussions. I believe Musk is going to be heavily involved there. Cook, 10% politician, 90% CEO. Apple also plays a key role here. But I just believe that's something that ultimately, it's not going to spoil the AI revolution trade. It's not going to spoil the chip trade. We will go through white moments, but my view, and it's been the playbook the last few years, you buy the winners on those opportunities. And I think that's going to be the theme this year.
Pick the winner of the year. Your number one stock pick for 25. What is it?
I think, to me, number one stock pick, I think continues to be NVIDIA here. And the reason it is that there's only one game in town when it comes to AI. It's the godfather of AI, Jensen NVIDIA. Stocks obviously sold off. I think we sit here, them along with Apple will be the first ones in that exclusive $4 trillion market cap club.
Yeah, all right. So I gotta restart all this stuff with the memory thing. But before I do, let me show you this. Blah 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 blah. Where is it? Okay, here it is. So I've been trying to learn this whole DeMark stuff. So this is a weekly chart of the S&P 500 here. So we've gotten our 13 count, right? The first week of December. Perfect time for the top. Yeah, this thing could probably keep going down into 540 again. Maybe. Let's see. Now, if we go look at the monthly chart, we also have a 13 count. Not very auspicious. So December, we had weekly 13. Monthly, we have weekly 13 count on DeMark. So this tells me, yeah, prepare for something to happen for sure. Think, and here with the daily, you can see the daily here. See that? Pretty close to the top right there. Well, 13 count there. So, I drew these trend factor lines here. So this is like that Fibonacci. I mean, we were talking about that in the previous stream with tropes and all that. So this is based on some Fibonacci. This is special for the DeMark. And you can see like 575 for S&P 500. That's one place it'll drop down to. And then eventually 540. Around 540, 542. So I don't know how January will go. But maybe January won't really decide it. It will just set the range, and then February will be where it's going. Okay? All right. So, very good. So, let's see how it goes. Again, you got one more week, guys. One more week. I'll see you guys down at the bottom when we get there. All right. So, let me just reset this whole thing, and I'll just play music while you guys wait. Play some music while you guys wait. Oh yeah, Bandit. You better plan on selling next week. Let's put it that way. With your crypto. You don't want to hold it too long here. This will be your last pump. Yeah. Anyhow. Yeah. Okay. Let me try to find where the heck the music is. I love my violins, man. There we go. Bandit, you better get out because the next time to buy crypto would be in May. If you listen to my streams, yeah, May, yeah, around May, probably late April, Up to you, Bandit. Up to you. If you want to hold it through then, that's fine. If you want. All right, so let me get see what the next video would be. China. Oh yeah. This guy. This is China Bear.
President-elect Donald Trump prepares his second administration. American companies will be keeping a close eye on U.S.-China ties. Ed Yadani, President Yadani Research, is still with us, and he thinks the promise of China's market has faded as its once booming economy hits trouble. And Ed, you're saying China remains uninvestable.
Yeah, I think that's really the message from the bond market. I mean, the bond yield's down to 1.6%. I think that's a clear indication that the Chinese government has overstimulated the economy, too much debt, too much excess capacity. And then on top of all that, the rules change on a regular basis over there. I think China did extremely well when the government allowed market forces to work and for entrepreneurial incentives to work to create more prosperity. But somewhere along the way, the decision was made that maybe that's not the way to go anymore. And it's not a good environment for a lot of businesses. And this is not just my opinion. I think the Wall Street Journal just ran an article saying that a lot of companies, U.S. and other companies, are deciding that the China market just doesn't have the potential that they thought it would have. And there's too much government intervention in trying to run one's business over there.
You talked about how the bond market is suggesting all of that. Some now suggesting as well that bond yields could test 1 before the end of the year. Might it even get closer to 0?
Yeah, I think it could get closer to 0. I think it's got to be disturbing to the government to basically announce that they've got another fiscal stimulus package, and to see the bond yield continue to go up is certainly not a vote of confidence by the fixed income markets that this package is going to do much. In addition, I'm watching some of the property stock prices in China, and they rallied for a little while late last year, and now they're starting to fade away. There's a story floating about, I think it was a Wall Street Journal article saying that something like $18 trillion of losses have been incurred by Chinese investors in the real estate market, much bigger than the losses we incurred during the great financial crisis in the United States. So I think China's kind of experiencing what Japan experienced, what the United States experienced, but maybe on a bigger scale. And a property debacle takes many years to kind of clean out and to overcome. Meanwhile, it continues to weigh on the Chinese economy.
What do you make of the contrast between China's bond and equity market? And I mean, we take a look at the MSCI Asia-Pac, or rather the MSCI China index and the CSI 300 index. They had the best year in 4 years in 2024.
That's after several really bad years. And if you look at the chart, it's not a chart that suggests that being a long-term investor has been very profitable. There have been lots of ups and downs, and you have to be almost a trader to get any sort of positive return on it. So yeah, you're absolutely right. It's had a good 2024, especially later in the year as the government came in with some monetary and credit stimulus programs. But now it seems like they're running out of magic here. That if the fiscal stimulus can't do the trick, then what's really left? And they really need to stimulate their consumer spending. They know that. But it's not working because, again, the Chinese individuals, households have a tremendous amount of money saved in their apartments, and the apartment values have gone down. The market is illiquid. It's hard to sell it. And if you sell it, you take a big capital loss. And meanwhile, consumer confidence is extremely depressed in China. So it all goes really back to the consumer. And if you can't get the consumer going, then they have to continue to rely on exports. And now they're getting the blowback, the backlash from the rest of the world. And the rest of the world is saying no more, no more dumping of Chinese goods in global markets, competing with our business. I mean, it's been a disaster for Germany. The German auto industry has been decimated by competition from China.
There's been a lot of disappointment in China in terms of stimulus, and we know that the market was expecting a triple R cut at the end of 2024. That didn't happen. Now they say perhaps at the end of this month. I mean, how significant is that in terms of how it might play out in the market? Might that be a game changer or not?
Well, I think, if they took my advice, I would tell them that the government should kind of copy what the U.S. did during the pandemic, and that's try helicopter money, just send stimulus checks to households. I think the reason they don't want to do that is it could be very embarrassing if Chinese households don't spend that money on goods and services, but instead save it to kind of make up for the losses that they've taken in the real estate market. But they're running out of options here. Monetary policy has eased. The bond market's eased even more, and yet we just saw that the purchasing managers' indexes for manufacturing was relatively weak in December. The good news is the services was somewhat elevated, but it's a very volatile index. And all in all, all the data adds up to a relatively weak Chinese economy with a significant recession in the property market.
But the messaging out of China has been of confidence. Just earlier today, we had an official saying that they will continue to build on growth in 2025. I'm just wondering whether it's just a matter of time, just a matter of waiting for Trump's policies to get that clarity before perhaps we see QE or other stimulus that may come its way.
Yeah, I think the markets are taking a wait-and-see attitude. Maybe in the past, when the government had more credibility in its ability to stimulate the economy with fiscal monetary policies, the markets would have reacted right away to the fiscal program that they've just recently announced. But the markets say, well, it's going to take a while before this actually gets implemented, and it's going to take a while to assess whether it's actually working. So I think that's the problem they're having with convincing the markets. And so far, the evidence for the markets is, there's not a lot of confidence that any of this is going to work.
When you take a look at Chinese assets, you take a look at the bonds, you take a look at the yuan and, the stock market, are they rightly reflecting the position of the economy right now, the weakness of the economy right now?
Are being realistic about what's going on there. We did see a rally on, as I said, at the end of last year, they did implement some monetary and credit stimulus. And monetary and credit stimulus, easy money, liquidity, typically tends to be bullish for stocks. But again, one of the key sectors is the property market, the stocks of the property developers. And they rallied, but now they're fading away. So that's just a sign of kind of the deep underlying problem. Look, the reality is that they've got a significant demographic issue with the rapidly aging population. And so they can build all infrastructure they want, but old people don't go anywhere. They don't travel as much. They can't afford to spend a lot of money on airfare and on super fast railroads. So the infrastructure spending, they've got beautiful state-of-the-art infrastructure. I wish we had that in the United States, but they have more than the country can really use in terms of the population and their demands for those kind of infrastructures.
The thing is, Ed, this remains the second largest economy in the world. Can you afford not to be in the second largest economy in the world? And could China perhaps be a diversifier? Could it be a market that you diversify in for your portfolio?
Well, some would say that. And again, from a valuation standpoint, it certainly, even with a rally, is relatively cheap. But I'd like to see more freedom for entrepreneurial capitalism. It worked really well for about 20, 30 years. And I think that was really what drove the prosperity of China. And to step on the brakes on that kind of system that worked so well is unfortunate, because I think China is a great country, great people, hardworking people with great intelligence. The technological innovations are great. I just wish that the hostile relations between China and the Western world, particularly between the United States, but also Canada, Australia, I think it would be in everybody's best interest if we figured out how to calm everybody down, and instead of preparing for wars with each other, we learned how to work with each other. But that's a very John Lennon kind of notion. I guess you and I can sing the song, and it wouldn't make much difference at this point.
Oh, very hilarious, very hilarious. All right, let's show some chart here. So, like I said, very good for trading. Isn't that what he said? Very good for trading. So, KC, my favorite Chinese stock, up 300%. If you bought it down here in October, or probably more if you went down here too. It's like 500% if you were really good. Anyhow, definitely something to watch. A lot of other stocks in China, definitely worth trading. They got the potential. You have Tiger here, $3 to 15, right? You could have traded that. Like, the impulse is coming. Watch these stocks. TIGR, Up FinTech. This is probably the best domestic type of stocks to be trading. FUTU, FUTU. Watch them. If you catch them at the right moments, easy trades. So you just got to find the right moments. And I'll tell you this, Tropes has been reading Joe Rabel's book. Very good. So I mentioned it last stream. One of the things you'll learn is something called, parallel, anti-parallel, or whatever he says. It's like this. You have the price going down this way, right? Moving down. So this is a Bitcoin chart. You have the MACD going up. Okay, so see there, MACD is moving up. Okay, I'm zooming in there. So you have the price going down, MACD moving up. So two parallel lines basically moving up on the MACD with the price going down. And what happened after that? It tried to fight down here at that moving average. Okay, the 18. I use a 4-hour chart for a Bitcoin. So I'll use a 40-minute, 4-hour, and 1 day 7-minute too if you want to go down to that level. And then here you got the pop right New Year's. Perfect. So that's one thing you got to look at. So study the charts. All right, you'll find these trades. This is very important. So when you start looking at these Chinese stocks, if you want to find out where's the right time to find the triggers and all that, yeah, pay attention. Okay, you'll have to find the right moments here. You'll have to find the right moments before these big moves. And we're about to come into a point where this will probably happen again. You get a huge boost. So definitely something not to ignore. So overall, yes, it's uninvestable. I wouldn't invest in it. To trade, yeah. I mean, you don't want to miss out on a $3 to $15 move again, right? Just saying. Okay. So let's go to Joe Rabel. This will be a segue to that video, and he'll explain how the S&P looks like in his opinion with the ADX. Okay, here we go.
This is Joe Rabel with Rabel Stock Research. So what I'm going to do today, Happy New Year to everybody. During the lesson, I want to talk about specific periods going back in the S&P because I want to show an example of a ADX setup that can take place, and that shows a sign that the market is getting a little exhausted. At least the momentum is showing signs of exhaustion. And when we go back through these different periods, it gives us a different feel for the ways that it can set up. Because right now we're in a similar situation. I'll go through the details on that. Also, want to look through some of the what I think are the more attractive looking cryptos. I'm going to go through the other indexes as well, and then we'll go through the symbol requests that came through. All right, let's go ahead and get going. Okay, I've got a weekly chart of the S&P up, and I'm showing the weekly moving averages. I got the 18 and the 40, both simple moving averages. I do have MACD up as well in this scale, and then, but this is the one we really want to focus in on, is the ADX. All right, and we do have the volume at the bottom, and that can be helpful in certain instances, especially when the indicator looks like it's clicking into gear. So what I'm looking at is a trend to the upside, clear trend. Notice how the 18 and the 40 are both rising at about the same rate. And you can also see how MACD really isn't all that helpful, right? We get divergence right from the get-go, not pretty early in the trend in 2013. And it just shows that divergence is broken in the MACD, because we go straight to a new high, and then we start to see more of these taking place. Now, we do get reverse divergence a few times, but if you're looking for standard divergence, it just never worked. All right. Now, when we see that the first time, we start to look at any future signals with a question mark and recognize that we're above the zero line and the overall trend is positive. It's different when we do this with ADX, though. ADX will confirm to the upside. You can see we confirm by any move above this horizontal line, above 25, is confirming the move. So we're confirming these moves until we get to this point here. Right about April of 2014, we don't show confirmation, but we also never break down. You notice how we came down to the 18 week and then turned right back up. And when we went to a new high here, we got confirmation again. All right. This is very important because this is what could be taking place right now. We could be setting up another move to the upside that eventually does confirm. However, if you notice, as we keep pushing forward, we got a period here where it was crystal clear in 2015, first half of 2015, that there was no confirmation. You see how Green DI made a move up to and then came right back down, and the ADX never got above 25 through this whole period. All right. So we had this whole area here where we should have been concerned about what the market was doing. All right. Yeah, we did have MACD confirmation again with the divergence, but this is the one where you want to be on the lookout for after it's been confirming for a period of time. It starts to show no sign of confirmation. Then we look for a real sign of a break of the 18. Now, this was the true violence where we took out support, and you really didn't have to wait till the end of the week, but you could see that this was clearly a violent move, breakdown, and something we want to be on the lookout for. And then we get a ABC, pretty decent decline. Now, it doesn't turn into a bear market, but that's a pretty serious decline we want to be on the lookout for and ready for. All right, let's look at the next example of this. Now, this one's a little bit different. Again, look at this move in 2017, or it was 2016, 2017, up until the peak of early 2018, we had strong confirmation. All right, so this would have given you no help in this little pullback here. But then notice what happened when we went to another new high. We make another new high here. Look at how there is no ADX confirmation. ADX could not get above 25, even though Green DI tried to push and make a little push here. It couldn't get the ADX above 25 here. So we knew that this was another warning sign. And then again, look at the violent break of the 18 to confirm the signal. That is really important. You can't just assume when you're going up that it's going to fail. All right. We need confirmation in price. And then we get the deep pullback into the late part of 2018. All right, let's look at another example. Now, this one's really important because this led to the bear market. And we talked about this. This is something that I go over every Friday morning. I go through a lot of detail on this in my on my YouTube channel because I cover the S&P in detail, again, on the Friday morning video. But look at what's taking place here. You see, again, how the 18 and the 40 look like everything's fine. You see how these are moving up at about the same rate. All right, but we have to keep an eye out for ADX. ADX confirms, ADX confirms, ADX starts to show signs of weakness. ADX clearly fails to confirm here. All right, we're making new highs into the end of the year. And, we see how this is showing an early warning sign that there's a problem developing in the momentum. And then we get the violent break of the 18. And that leads into the bear market decline. All right. So we want to keep an eye out for this. Now, let's go to the present day. Now I'm doing this in the morning so far. I'm gonna once the market opens, we will I'll go through this symbol request. But look at what's taking place here. We've got ADX not confirming after confirming for a pretty strong stretch. You see how the 18 and the 40 are rising? They're not showing any real signs. And this is why I like using ADX in this instance. It's why I don't really like paying attention to the MACD, because you can get false signals with the divergences. But with ADX, when we get this type of pattern, we want to be on the lookout now for a violent break of the 18. That's the signal here. If we haven't had that, we also haven't had up until this point here, through here, we really have had momentum confirmation with the ADX. Now we're not confirming, so we got to be careful. Now, if we make a strong move off of this 18 and this gets going again, then we got to be real careful about getting too bearish, right? Because we don't have confirmation on a price basis. Right now, I'm looking at this cautiously because we haven't broken the 18, and there's actually a lot of underlying weakness when you go through the individual stocks. But the index itself hasn't confirmed the signal yet because it hasn't broken the 18. But something we need to really be on the lookout for here over the next, few weeks, I would say. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabelstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. As always.
Yeah, so you can go back and I put the link in the description. You can go there. And the previous stream, I went over with Tropes, all the links. So if you're interested in his book and things like that, yeah, you can go get them. But overall, you can watch a lot of his videos. He has tons of them on Stock Charts TV and his own channel. Invest Like a Pro, I believe it's Invest Like a Pro. So you can go there too. Here, let me put it on the chat. But yeah, go back to the previous stream. We talk about it. So if you watch enough of his videos, you understand his methodology right away. I love the way he does the multi-time frame stuff. And this is the first time I've shown a video where like he goes in depth in the ADX. I try to avoid talking about the ADX because most of the time, if you just do the moving averages and the MACD, that's pretty sufficient. But you can see like when you're at a point now where you need the ADX to tell you, hey, there's a warning, and we're coming up to that warning right now with the S&P 500. All right, so that's Invest Like a Pro right here. So yeah, you got to use your tools at the right moment, but I don't want to confuse you guys. Too much information leads you into like paralysis. Okay, they call it analysis paralysis. Like I see that a lot. People have so many indicators, so many things, but then they just get lost in the sauce trying to figure things out. Especially people that do the Fibonacci and the Elliott wave stuff. They just see patterns everywhere. They're just trying to find patterns in the clouds. Like this kind of technical analysis, I do not like. I rather you guys try to keep things simple and master the simple things first, and then later on, like add on to it. So you should have a set of signals that you trust, a set of ways to read the candles, very well. You kind of have a feel for it. And then once you get that, then you can move and add a little bit more, because sometimes you get into situations like now where we're unclear. We're not sure where the market might turn, and we have to be a lot more careful. And this is where like these other indicators might be useful, like the mark indicators, the ADX, something like that. So we'll continue on and figure those out. But for now, I think we're safe. Don't need to worry too much until next week. But yeah, next week we'll definitely have to worry. Okay. Now this last video is like Martin Shkreli again, and he is going to analyze through fundamental analysis WGS. This stock I mentioned maybe at least once before. It is a high flyer stock, very nice looking chart, very bizarre because of how clean it is. Okay, you see that. A direct straight line down and a straight line up. Very rare looking thing. So WGS, Gene DX. I believe it was an IPO. I'm not sure if it split anytime. It doesn't look like it split anytime, but it was IPO'd at around $400, $700. Went all the way down to $1, and now it's back to $80. Fascinating. It's if you don't like 23andMe, you can use GeneDx. They do genetic analysis testing. So very interesting looking stock, and it's now doing this right here. We are banging into this point, this red bar set in August 2022. We are now on the top of that range. Are we going up or are we going down? I have no clue. But let's see what Martin Shkreli thinks about it. Let's see.
Okay, somebody wants me to look at WGS, which is GeneDx, diagnostics company. Oh, these guys were Semaphore. Semaphore changed their name? I do remember Intepridine. I want to see a new quarter of progress for Chegg before I talk about that. Oh, did Semaphore get bought out? Semaphore went bankrupt, right? I don't even remember. Exactly, Kier. They won't return my calls, so they want to go bankrupt. They'd rather go bankrupt than let Shkreli run the place. I like Madrigal. And Angelos, only if you're a Godel customer. Yeah, very toppy. I won't even touch Rumble. I got my hands full with these baggies. I don't always buy calls to hedge. These guys have a ton of property. Commodities trading is not more complex. It's just a question of, are you a good trader? If you're a great trader, commodities is fantastic. Because there actually isn't that much to learn. And it's more about your trading instinct. Can you whip it and flip it? Whip it, flip it on the skillet with the scripted. I'm just short the common, Jexler.
Order filled. Order filled.
No, I don't read Seeking Alpha too much. What the Seeking Alpha say? Yeah, Angelos, that's right. So if you are a subscriber, you can chat in general chat.
Order filled.
I am not covering my short. I am actually selling the last few call hedges I have. Yeah, no, good call, RJ. I try not to do anything too complicated. Evan, what's up, IQ? I don't know. Sometimes markets, stocks go up for no reason in particular, and you don't really have to put too much thinking into them. Markets are wilder than you think. For Nebius, I would not be bullish. It's a tough business. I'm not short Nomura. Yeah, EMA is really not friendly. They're not going to let any bad drug get approval. Like missing the primary endpoint, changing the definition of the primary endpoint. They don't play any of that shit. They'll just tell you, go do a new study. And reimbursement's even worse. Drug will work and they say we're not paying for it. And they got no IP. Thank you. Yeah, I have to figure out this whole relationship and history of this company, GeneDx. Do you guys short IQ? I got a good short for you. You could just email me or vice versa. But in general, I like quantum computing stocks as shorts. And I have one very good long as well. Good old Connecticut. Spent a lot of shorts. And I have one very good long as well. Good old Connecticut. Spent a lot of time in Stanford and Greenwich myself, the hedge fund community there. All the Tiger Cubs. I don't know if Chase will make a big comeback or not. Oh, that's great. I love that IQ. Yeah, a lot of VC firms and hedge funds have that dynamic. Their partners always calling me saying, "Hey, my guys love your stuff." And I feel like I've taught, hundreds or even thousands of young Wall Streeters the ropes. But, learning, you can learn from your colleagues. You can learn what not to do from your colleagues. Some of your colleagues are better at things than other colleagues. It's always a learning game, and it's hard because you also have to take action in the markets. So you can't learn over a lifetime. But I find young people almost always are too quick to act. They want to be right. They want to be big shots right away. And if their bosses are asking them to not necessarily put their neck in the guillotine, then they should just absorb and learn. But sometimes you can only learn by taking action. So it's a very hard thing to mentor and teach young guys. And the biggest problem is oftentimes the younger guys, once they're a little more seasoned, they'll often jump ship and do something else. So it's hard to find loyal guys too. Really, really tough to be a portfolio manager in this environment. Things are changing a little bit, I think, where people do want to pair up with somebody for longer and longer because it's safer. But finding the right guy to pair up with isn't easy either. Yeah, stunning. I feel the same way. I feel like there's a market correction coming. I'm not a beta person. I mean, I don't like to predict what's going to happen en masse to securities or stocks. I just feel like there's so many overvalued stocks that last time this happened is a good time to be bearish. Yeah, I think AVXL will inevitably go to like 1 at some point. It's my third biggest short. Very painful today, but You know, shorts can be painful. That is part of the game. I don't think the drug does anything. I don't think so, Bodine. Tech and the internet was something that actually did work out in the long run and was a big deal. It was life-changing. Quantum may or may not be life-changing. It's unlikely to be life-changing very soon. It's more likely that the bubble will burst. And even though the tech bubble, the 99, 2000 internet bubble burst, it actually was still valuable. So it shows you that there is a play there where bubbles burst regardless. Even if they ultimately prove to be valuable, bubbles tend to burst. So I do think you're going to see the quantum bubble burst. But the funny thing about bubbles is that they self-propagate. So as they advance, they embolden more people to advance. They create more margin for further purchases. You know, there's a lot of that dynamic happening. So, it's a tricky thing. I don't have any cash guard. At least in this thing. I haven't looked at Geo. Kind of hits too close to home, if you know what I mean. I'm never going to be bullish on, on that stock. I just got to say that I've been a customer, an unwilling customer of their stock. It's just not, you know. My biggest positions are short quantum, short AVXL. Let me see here. Short QMCO, short MicroStrategy, short QUBT, short DJT, short Huma. Those are kind of the bigger ones. Short SoundHound, short Rigetti. Brian, I think with enough experience, you just stop caring. It's a young trader that has emotional problems. You get older, I mean, when I was younger, it was a huge problem. But once you get older, you stop caring so much, and you get, I think you get pretty neutralized to it all. But everyone's different, you know. Some people say that you are supposed to use your emotions and convert them into something valuable. I haven't been able to do that, but I like Mark. I talk to Mark every now and then. He's got a great nose, obviously. The one thing about Mark and some of the other guys that are out there as career short sellers from the 80s is that they're very tenacious. I'm a little less tenacious. But everyone has a different personality. When I sink my teeth into a short, I haven't necessarily made up my mind. I am willing to hear the other side, pretty much always. A lot of the guys from that camp, I'll only mention Mark because you mentioned him, but there are many people like him. They're very good instincts. They're very aggressive, but they don't let go. They're like a dog that's bitten down, and they will not let go no matter what. And that's usually a good thing, but occasionally, you know, that's a bad thing too. In general, they're right. I mean, look at what Mark did with MiMedx and some of these other things. They're generally usually right. But, you know, it's not always my style, at least, to bite down and never let up. I will let up. Okay, so these guys aren't really Semaphore. Semaphore's revenue is de minimis here. relative to the old Gene DX. Which makes sense. Nebius, I haven't followed the Riley guy. That's funny, Hood One. I don't think AI will take over software development completely. It's not that easy. You know, one of the hardest things AI doesn't do very well yet is like entire repo. You try to shove more than 1,000 lines of code in GPT, it just can't handle it. You know, transformers aren't really built for that. We need new architectures. Now, I do think things will change a little bit, but you know, we're not looking at the end of software. Now, I do think things will change a little bit, but you know, we're not looking at the end of software. But it is a fantastic tool. I mean, I think OpenAI will be worth $500 billion, to be honest. I also, yeah, I use Cursor. I have Cursor open right now. I have to get out of here at 4 o'clock to go back to work on Cursor. Yeah, Devin, there's magic, there's all kinds of stuff. I think AGI is like a bit of a misnomer. It's just a different kind of intelligence. Human-like intelligence is, I guess, what a lot of people want to say AI. AGI is kind of the definition of. And, you know, we are unique creatures. The same way, I mean, it's a silly example, but looking at my cat, I brought back Trashy, by the way. So any of you old school people who've been watching for a decade, Trashy's here. She's hiding, but I've reunited with Trashy. But you know, the cat is a unique animal too, and the cat is very optimized for certain things, hunting in particular. If you watch even a little house cat hunt, I mean, they're remarkable how they hide and stalk, and they have the perfect timing of surprise, even better than we do, because that's what evolution programmed them to do. They're these amazingly, you know, strong, you know, killers of sorts, right? Oh, Ace 27, that's a good idea. So, you know, we are a different species, and we have strengths and weaknesses. AGI, or O3, or O2, or O1, or whatever OpenAI is built, those things are kind of their own species too. And, you know, they're made less to feel and to use emotions. Like Minsky was very, the MIT professor, who actually had Epstein ties, Minsky was very convinced that emotions played a huge role in our intelligence. Now, whether he was right or wrong, I'm not sure, but you know, clearly when we make LLMs and stuff like that, we're not really prioritizing them to have emotions. So, you know, this unique species will continue to have directed evolution by the programmers that say, for now, the architecture we've had isn't really perfect for software engineering, but it's very good. That architecture will change as we direct it to change. And we say, well, it's really bad at long-term memory and keeping huge amounts of context in place. Well, we're the engineers. We can fix it. You know, whether we fix it right away or not, it'll eventually have that really long context window where you could say, here is my entire enterprise repo and my entire enterprise topology. You know, all the networks, all the servers, all the software. What do I do? And it looks at it and says, well, I see a bug here. I think you can make this routine 30% faster. And I recommend you moving from this service provider to another. That's the kind of thing we dream for. And you say something like, well, you know, I want you to extend this bond software to stocks too. And it just sits there and works for a day or two and says it's done. Those days are not here yet, and they're probably not going to be here for a little bit longer. But I don't know that the software engineer will ever be replaced because these are. But I don't know that the software engineer will ever be replaced because these are tools that you can use as a software engineer, and the opportunities to create software will go up. When Excel came out, bookkeepers went out of business, but financial analysts 10x'd, corporate FP&A 10x'd. So, you know, in general, I don't think you're going to have less people interested in using software. You're going to have more people interested in using software. For example, for me, I've been able to value certain options contracts, binary contracts, a lot more easily than I would if I didn't. So I don't want to give away my alpha, but there are certain options contracts that are esoteric, hard to trade, hard to value. And with GPT's help, I've been able to value them very easily. GPT writes the program for me. I know enough programming that I can put it in a for loop and put it on a website, and I can look at my front end. And now I have a real-time options evaluation system that's really sophisticated. You know, I didn't have that before. It was too hard for me to build, too complicated. But AI helped me push and do something that 10 people might have taken 10 people to do, and I could do it myself. So, you know, there's going to be an explosion in the need for software developers, because as much as AI will, you know, tell you what to do, it can't really deploy and debug that well. It can assist somebody in deploying and debugging, but it can't really do it. It's not always up to date. For example, I mean, O1 is not up to date at all. So you have that really great reasoning ability, but it doesn't necessarily know what software was deployed yesterday or the day before. None of these systems know that, really. Will that change? Yes, probably, but those days aren't here yet. And every time a job gets terminated or a use gets terminated for a human software developer, I think 2 new uses open up. So you just have to, software developer, you have to stay malleable and flexible, which is something all software developers know how to do anyway, right? There's no person in software that says, I'm just going to learn React and I'm going to stick to React forever. They know that someday the React gravy train will be over and you're going to have to learn some other framework. And the same thing has applied since time immemorial. I mean, there's nothing that new under the sun. So being a good engineer is always going to be in demand, I think. But I've been wrong before, could be wrong again. Maybe it's the end of software. Who knows? I mean, some people think it's going to be the end of math. That's much harder as a human to be creative. These machines are horrible at being creative. They're very good at applying analogical reasoning. They can form analogies really well. But creativity is something that is an analogy to something surprising or difficult to see analogy, or something just out of the blue, a new idea that's just a try instinct, error, you know, things like that. And machines are terrible at that. So I don't think some of those things are going to go away. So, and if you've ever used some of these machines, you know what their shortcomings are. I mean, they're good. They're not that good. All right, if you're just tuning in, I'm looking at GeneDx, which is an unprofitable diagnostics company, genomics. Pediatric and rare diseases. Their biggest customers are like UNH and Aetna, which is no surprise. Kind of curious what type of tests they do. The ticker is WGS, which is a whole genome sequencing, which I would imagine is not their big driver here, but I could be wrong. Not too many details in the 10Q. Let's see if we can get it in here. This is cool. I don't know. Profitable for who? Traders or sailor? I just found out an X dated sailor. How funny is that? One of my exes. Small world. The best way to get over an X is find a new one. Looks like they do exome testing. Looks like they do a lot of newborn screening too. Where my scrum mommies at? People who get paid to promote penny stocks, paid pumpers? Promote penny stocks, paid pumpers? Talking about paid bumpers? Talk about Lily Phillips? The problem with all growth stocks is, unless you really intimately know what's driving the growth, you don't really know when it's going to end. It's hard to know that it's hard to think that the newborn screening market's going up. Yes, I'm short QUBT. Wabistics. Joe Springer, or Alpha Dog. It looks like most of their business is exome sequencing. It's too bad Illumina couldn't get into this business. Waifu reveal is soon. Hold your horses. I am short AVXL. I covered Galt. Okay, so it's $3,000 per exome test. Makes sense. I don't know. I still think Galt should go to cash price, but I'm not going to wait. I think there are some limitations to self-improving AI that would have to be overcome over time, like any other technology, yeah. Same thing with quantum. Yes, Vitali coming soon. Yeah, Galt owes money. Technically, Galt has no cash. No, I don't have that high of an IQ. I don't know if too many people have IQs that high. Yeah, looks like a bubble. Yeah, around there.
Order filled.
Left click. Right click. Clickety clack. Okay, so how many babies would merit testing a whole genome for? Well, I don't know how many of these are babies versus patients, but a lot of people have diagnostic mysteries. So 19,000 tests a quarter doesn't seem that high. There's 4 million babies born in the US, just the US, every year. I would think this is going to be a pretty good business. Low key or no cap, this generation, man. UNH situation is very sad. A man died for no reason. Horrible. Ooh, they separate the tests here. It's good. We got whole genome, whole exome. And then they have whole exome. Or exome based, whatever that means. Exome based is actually going down. And then they have cancer. And they're telling you by revenue. Clear that the big growth driver here is their whole exome business. You just got to see why NGL, no cap. FR, for real, for real. I'm short all the quantum stocks. Maybe I should come up with my own quantum stock. What do you guys think? Squarely quantum. I've looked at IBKR, Squantum. I'm Albanian, so an extra Q could make sense. We have extra Qs. Quantum AI Bitcoin with VR. And we're adding VR? Damn. I didn't say they're the Swedish Novo Nordisk. Did I? Doesn't sound like something I'd say. I mean, Sweden just doesn't have that many big companies. Okay, I like the stock. I have 3 monitors. I am Albanian. No, I would hold off, Treg. I've been saying hold off Chegg for a long time. Stock went up a lot. Stock's back down, but I want to see how their next quarter is going. The genome is all your genetic data. So whole genome sequencing is all of the genes as opposed to just one.
Hey, is the video over yet? I mean, what the heck? How long did that take, man? Oh, shit. So what was the conclusion? Should I buy WGS or not? Man, I don't got time for this. That's why I don't do fundamental research. I don't know what the heck. Clickety clacking, freaking spreadsheets. What's the conclusion? Should I buy? I guess not. I don't know. It looks like towards the end he was like saying he was said buy or something like that. Okay, I gotta go eat, guys. Here we go. This is the reason why didn't hear his takeaway. I don't know. Whatever. I don't think he had a takeaway. It doesn't matter anyway. Look at the chart. What's the chart? We got resistance 82, support 37. Wide range right there. We've been moving up since November 2023, along with the rest of like the markets. It's done quite well compared to other biotechs. HIMS is probably a similar looking stock where it's outperformed most of the biotech sectors. So the conclusion would be he doesn't know probably. Oh, the growth. They do exome gene sequencing, whole gene sequencing, all this stuff. What's the revenue growth here from babies, testing genetic defects, stuff that I don't know. I have no clue. I'm guessing he's going to say like what? Wait till the next earnings. By that time, we don't. Yeah, that's going to be a while though. That's March. Okay, so I'll wait. In any case, Bitcoin is up. Nice. Very good here. Very good. So if you did your trade this week, you should be doing pretty well. Let me see what else I got. So and natural gas. Yeah, I closed my shorts there. So if you're in cold, I don't know, you can risk it over the weekend, but see if like the weather reports get milder, and then you can get another move up. Otherwise, wait for Monday to see if you can jump back in if you're going to continue shorting it. But if you short it on right away this week on Monday, like at the bottom here between like 36 and 38, it's probably like about 20%, right? You already got 20%. Okay, that's good enough. I'm not going to be too greedy about it. And go back to the beginning of the stream if you want all my takes on other stocks. We'll see how it goes. Let's see what I got here. Yeah. Well, I was letting you watch Martin Shkreli. Yeah, I mean, I I just want to show you, you could work hard for that. I mean, here, right? So all my gains for today, 18 G's, pretty good. So I mean, yeah, you could just spend your time trying to analyze stuff fundamentally, but dude, personally, I think a lot of people should just look at charts, figure that out this way. Not all of us have extreme autism, high IQs, or whatever. Even if I did have a high IQ, I definitely would feel bored analyzing companies and such, because there's so many things that go into the behavior of a stock move that you can just make quite a bit of money just trading people's behaviors and the perceptions of a stock. I have no idea if WGS fundamentally can keep growing, but for sure you could tell that whoever bought it at the IPO prices of 400 to 800 and then sold, this was the worst time to do an IPO for biotech. The whole biotech sector was already topping right here. So obviously an IPO like this would get the brunt of the punishment. So I have no clue if this was warranted even to go down to this level. Was it worth $1.23, or was just an overreaction to how bad the interest rates were moving up from August 2022 into November 2023? So this is probably the fair price. So this company is probably priced correctly now. So it was overpriced at IPO and then underpriced during the interest rate hikes, and now it's just fairly priced. So you see that? Even market efficiency. I think the market is inefficient And if you take advantage of where these stocks are in their cycle, you'll make money. So I think right now it's probably okay. Maybe it's overpriced now. It probably should just be down here. Actually, maybe it should be at the $30 area. It shouldn't even be here. I have no clue, right? I'm not going to waste my time looking at 10 Qs and all that and figure that out. It doesn't matter. It really doesn't matter. All that matters is what price you buy, what price you sell, what price you short, what price you cover. Okay, so that's the whole point. But it is interesting to see how someone might go about and approach it. So you can, that's all Martin Shkreli's streams are, and he gets hundreds of viewers just sitting there, barely talking, a lot of dead air, clickety clack, and people, because he has such a infamous. And I think in the middle of the stream he said he had an ex that was with Michael Saylor, Michael Saylor of MicroStrategies, right? CEO of Micros. So yeah, I think a lot of these guys who hang out in Florida. I don't know if he hangs out in Florida, but De Laguna, that was one of his ex. So maybe that's what's going on. Maybe it was her who was dating somebody, or maybe he dated someone else in Florida during some time. So who knows? That they definitely probably ran into each other in some Bitcoin conference. I'm sure that's what happened. So in any case, study the charts. Oh, Vuzi is another one. I didn't put that. Oh, Vuzi is an amazing stock from November up here. This is a meme stock. It's quite interesting. I have no clue if there was any real news to cause this except for the elections or something, but now we're back here. Huh? At this point, this is definitely a range here. This is an important one right there. You see that? It's got touched here in May 2022. Was the previous high of October 20th, so probably COVID to October. It was touched several times, January 2023, July 2023, and now we're back up here again. So yeah, there you go. So something. It definitely, there's a magnetism to it. Definitely there's a magnitude to it. I've seen Stellus on his terminal a few times. Is he expecting that one to bounce up? Is it a pharmaceutical stock? If it is, then that's probably why he's interested. Yes, it's probably pharmaceutical. So his bread and butter is a pharmaceutical. So that's where he understands the most. That's his industry. So he likes to do all the work, fundamental work there. And I would say, doing charts on stocks like that is probably a waste of time. So it does make a lot of sense to do fundamental research there, because most of this stuff is dependent on FDA approvals, mergers and acquisitions. I think it's very rare for insiders to start buying stuff before imminent result, and you would see it on the chart. I think it's way too obvious to get caught with insider trading. At that point, yes, I think doing fundamental research makes sense. And these are lottery tickets. All these pharmaceutical stocks that are required to have FDA approval, that have no revenue. Like, look at this one, right? Probably doesn't make any money at all, still makes no money, will never make any money, even after FDA approval. All they hope for is to get bought out. Every of these small pharmaceutical companies, biotech companies, all they want to do is get bought out. They rarely will ever go on their own and start making money. That takes way too long, probably 50 years or so. So all they're hoping for is to get bought out. So yeah, it makes sense. I think for him to do that, a lot of fundamental research in pharmaceuticals. Yeah, if you can find a lottery ticket, penny stocks like this one, and if he can, if he's satisfied and says like, hey, I think this stock has a drug that can't be compared, it's worth a shot, then sure. But then that's all it is. It's just a lottery ticket. Okay. So you're probably going to wait for years. That's perfect for someone with like an IRA account. So if you have an IRA account, you can just load them up with like stocks like these, right? You could just pay $5,000 for like a $1 stock like this. And if you really believe him and he did his homework, Why not? It could just jump up at $20 and cash out, right? And if you have enough of these winners, yeah, it's worth it. Yeah, I kind of hate. Yeah, I hate too. I never play them. I rarely play them. Last time I was in a big one was like, during COVID. That was obvious. You just did Moderna, Pfizer, all that shit. And the other before that, I did MNK, Mallinckrodt. I mean, it got delisted. It went bankrupt. But Mallinckrodt is the company that did the similar thing to what Martin Shkreli got in trouble for, which was raise their drug prices 1,000x or whatever. But that wasn't the reason Martin Shkreli got in trouble, though. It was just because he didn't disclose some information. It's kind of like how they try to get Trump. It's like, yeah, you made people money, or you didn't like actually do any harm, but because of the way you filed out paperwork or whatever, you were hiding information to investors. That was the problem. Right? It was fraud. And so they just got him on that. But I think the real reason is because he was just such a noisy, like, blowhard that he just pissed off a bunch of people, and too many people on the news media and the public started realizing, hey, all these drug companies are like just jacking up prices on drugs that have no difficulty being made, or there were no reason for them to have it. He just bought a patent on a drug, manufactured a drug, raised up the price because it was like a unique patent and stuff like that. Mallinckrodt did the same thing. So it was called Mallinckrodt. It used to be MNK. It's probably got delisted, and so I don't even know if it's traded on the pink sheet. Oh, here it is. It's the pink sheet right here. MCKPF. Oh, well, maybe it's gone there too. So I don't know. Maybe it's all gone. Yeah. I mean, I don't have a chart anymore. I don't have a historic chart, but you'll have to remember. So Mallinckrodt used to be $20 a share. It got short attacked down to that price from something high, and they took something called Acthar gel, ACTHAR. You can look it up, gel, GEL, and they used pig parts to make this gel, and it was a unique drug that I forgot what was the disease. It had something to do with babies too, but so if you didn't have this, your baby would die or something, and it was like an orphan drug. So it's orphan drug classification, meaning like it's a special drug. They were the only ones that made it, and it wasn't hard to make. You just get a bunch of pig parts and create the gel, and then they just jacked up once they bought that drug from somebody else. It was a patent or whatever, and they just jacked it up like to $700 a vial, something like that. So, and that's why the stock price went from 20 to like almost 200. That's why I sold it, and then after that, it just fell apart after that, the whole stock, because like aside from that drug, the company really didn't make much money elsewhere and other things. They were probably the only ones that sold cocaine, medical grade cocaine. They're the only company that could do that in the U.S. So yeah, it was a Missouri, and they domiciled themselves in Ireland. So tropes that was over 1 week. That's just 1 week, okay? So, but that's the gains today, but you have to consider, so most of that is like over a week. So I guess my total gains would be like 20 G's or something. So it wasn't much. I mean, I didn't gain anything because the market was going up and down around New Year's, okay? So I didn't make anything really between then. So it's essentially like if whatever I bought Monday, Tuesday, and I sold I'm selling today, and that's it. I don't know. Yeah. So I'll have to decide how much I want to sell today, though. So it's not really like I got all those profits, because if I decide not to sell all of it, then yeah, whatever. I don't know. Wait for Monday, get greedy. Who knows? So it's always a back and forth, man. But I'm just telling you, it's like I'm just trying to show you guys. It's just, dude, I'm not doing anything crazy. It's just some kind of 20% gain here, 10% gain there, 5% gain. I'm not doing no options. Everything's pretty whatever, you know. If you have a lot of money, you don't need the options, and just looking at charts, that's it. So, oh, the other thing that Scully mentioned was he was using AI to help him analyze options. So, like I said, options market, like you got to really know what you're doing, and that was a good tell of like a lot of these people now that have the AI tech and know how to use it correctly can help work things out for them. So what used to take a team of people now just needs a few people, right? So I don't need like 30, 40 people to do any analysis on stocks. I can just get like 10 people, 1 person, 5-person people. That's it, with the help of AI. So that's another thing to consider. So he was mentioning that too. And I think he's right on point with his analysis, saying that it's like the spreadsheets. The spreadsheets killed a lot of the bookkeeping, the like low-level bookkeepers, but it didn't really kill any of the financial analysts, right? The high-level people. So this is what we have to consider here, that yeah, the AI will eliminate a lot of low-level jobs, right? And so all the bitch work, like looking at charts, looking at option pricing, looking at that stuff, nowadays it has to be done better with AI. You got to be more efficient. So we're gonna have to get to that level eventually. So we'll see we'll get to like the end of the year as we move on. So okay, there. So yeah, let's look. So good. So let's see how the QQQ is doing. It's probably pulling back now, huh? From this high. Yeah, probably. Yeah, it's already hitting the hourly 40 going down here. SPY. Yeah, same thing. So this is the top of today. We're done for today, right? Bitcoin. See how that is. Yeah, we already hit like the top of this resistance, 98K. Okay, let's change it to 4 hours. That's what I'm looking at. The next one is 99 to 100. Yeah, see if it could get there. It could by Monday, but after that we can see how it goes. I already showed some of that before. I don't like showing that too much because you guys shouldn't rely on that. Every ticker I talk about is just the charts and whatever, and it's up to you to decide how you position, like how much a percentage you have. I have 200 and I trade options. Yeah, so that one I had about like 188K at the end of November, so beginning of December. So that was the last time. After that, I just take out all my profits and then reset everything back to like below 100K. And that's it. Everything else just goes to cash, bonds, and then long-term positions. I have to see if I want to add to long-term positions this year or something else, probably like natural gas or whatever. And then yeah, so those longer term positions where I have Palantir and all this stuff from 2-3 years ago, and Axon, this stuff here, yeah. They'll go in like an account that's probably like over 800 G's or something like that. But the rest of it is just like shit accounts, like trading accounts or whatever. Yeah, I do not try to get over like 50,000 in general too much. But if it's a good year like last year, yeah, I'll answer to 100K and I'll keep trading it as long as I can. But if I get too far above like 100K, I definitely take it off. Like after a month or a quarter, I'll take it off. So I don't do that. So it's up to you guys. It's all up to you guys. It's so because like it has no purpose. If I show you all that stuff, what's the point? Nothing. Because everyone's has a different situation. Okay. So I grew my accounts based on just simple buy and hold since the 90s. Right. And you guys will have different will have a different philosophy. All I'm trying to say is like just study charts, learn to read charts, and from then on move on from there. And with the charts, you can do whatever you want with them, because the charts should apply to investors, day traders, swing traders, everyone. That's it. You don't have to study biotech. You don't have to study semiconductors. Like you're not going to understand the fundamentals of any of that stuff. Just let the market dictate where it should be. Okay. The more you study that, the better you are. I just say if you're a paper trade or you're just using, I already showed it. Go back to the account. It doesn't matter. I've already got people to get their portfolios up. I use Fidelity. I use E-Trade. It doesn't matter, dude. Robinhood, like, doesn't matter. I don't need to show anything. I've already showed enough. Like, and screenshots can be faked anyway. So what does it matter? You probably wouldn't believe it anyway. So it doesn't matter because I'm not getting paid to do this. I'm not selling you a service. Why would I do this for free? Up to you to decide. Okay, that's it. Representation of dollars, or the only number to me, they're just fractal mathematical things that signify behavior. So human psychology, that's it. You can abstract it to that point where you can just look at it as a human behavior being represented in a chart. So I do not believe in the efficient market theory. I believe in the inefficiency of the market and human behavior, and that's where you have to attack and get your money. That's it. Yeah. So, and I already covered that probably 4 streams ago, where I talked about like how I don't believe in efficient market theory and I believe in behavioral economics, and 2 people in some Chicago economics school like keep fighting each other over it. So yeah, so you can look at the data on that, but that's all you gotta do. So yeah, I'm not here to be like telling you one way or another per se, but I tell you what I believe, and I'm just showing you from time to time, you know, what I make to keep proving it to you. Yeah, it works. Yeah, it does work, but I'm also not going to say like it's peachy dory and like, oh, you can get this all the time. No. You it's going to take a lot of practice, and most of it is going to be ego driven, which is which is like going to be on you. That's why I recommend the book. That's the only one book I tell you to buy, is like Trading in the Zone, because a lot of people fail when they start becoming gamblers, and their trades are more ego driven. Okay. And of course it is gambling, but you gotta treat it like a job, where you just go like, okay, I see a positioning potential here. I see a cycle position here. I take my trade, I sell where I can, and I'm done. I move on to the next one, and you keep doing it. It should be boring. It shouldn't be exciting. We're not sitting in a jackpot where the lights flash and go like bing, 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 or whatever. No, I rather just keep making easy trades over time and doing that way. Otherwise, just go back to normal investing, right? Hold 20, 30 years. If you're lucky, if you catch the cycle at the right time, yeah, you can do it that way. So that's how I did it. That's how most of my money was made. Just catching things at the right time and waiting 10, 20 years. But I think nowadays we're entering a different regime. Yeah, very different. Where I think trading is going to be more profitable after a while than just people just waiting and holding. Because the market's going to get more volatile once they introduce 24-hour trading, right? So they're going to try to do that 24-hour trading. Yeah, 24-hour trading. That's going to make things worse, where you're going to see a lot of these people just sloshing their money around and acting way stupid, right? So that's where the psychology comes in. So yeah, Trading in the Zone. Let me find that book. I'll put that, Trading in the Zone. So I mean, it's an easy read. I didn't even buy this book. Somebody just gave it to me, a hardcover version too. So yeah, but yeah, you can get the ebook, whatever. And what he'll do is like he'll ask questions at the beginning. He'll ask little questions, a quiz, and then at the end of reading the book, he'll ask you the same questions again, or in a different way, and then you'll answer it. So it's more of a test of your ego. I think psychology plays a lot. That's why Universal Jones, if Universal Jones gets into it, he can start offering classes on trading psychology. I bet you if Universal Jones like did this and saw where the problems in psychology comes in with trading, a lot of people would pay big money just to go to seminars just to improve their psychology. So a lot of this trading stuff is a fight with yourself at the end of it. And I think the higher level traders, that's what they'll say at the end. It doesn't matter what indicators I use. It doesn't really matter what tools I employ. At the end of the day, it's the higher level traders understand it's a game with yourself, because a lot of times you'll find out that, hey, you have a really good trade, but you don't put enough money into it. You just scared off and don't put a lot of money into it. And the other thing is, or like let's say all seeing guy with Palantir, he could have, everybody saw that Palantir was $7. Like, why didn't he put a lot of money there? His psychology is he doesn't like to do that. He only buys along the way up, or buys the dips along the way up. And so you'll run into people that happens a lot, where they are afraid to actually buy the big amounts at the right points in time, right? Cyclically, it was the best time to buy tech stocks at that bottom in 2022. And you didn't take the shot of buying more then. You were too cautious and waited to buy when it gets more expensive. That's a problem. That's a problem. And then you have the reverse, where I'm trying to convince him to, like, oh, dude, we could be at the top of the market. Don't hold. Like, I'm not saying sell everything, but I'm just saying, like, if you notice anything wrong with the market in the coming year into 2026, like, you better just say, okay, I made my profit, get out. You know what I mean? Like, don't expect it to continue up. That's kind of always going to be people's problems. So that's why when people just say, oh, buy low, sell high, that's an easy thing to say. That's not an easy thing to do. That's not an easy thing to do at all. It's all psychology. So yeah. That's the difference between a good, great trader, good, great, bad trader. That's it. That's all it is. Yeah. Okay, guys. Gotta go eat now. Otherwise, I'm gonna be smacking in the dang microphone. All right. I'll see you guys later.
Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.